Good morning, smart money. If you thought Netflix's password crackdown was aggressive, wait until you see what Costco just pulled off. The stock has soared almost 37% in 2024, and we're about to crack this golden egg and see exactly why smart investors are treating this membership move like the retail equivalent of discovering oil in your backyard. Right now, as you're watching this, Costco has rolled out the tech at about 350 US stores with mandatory membership card scanning at entrances. But here's the kicker that everyone's missing. Channel checks suggest membership counts at selected Costco locations following implementation of the scanners is rising by double digits. That's not just enforcement, that's pure revenue acceleration disguised as a security measure. Let's navigate these murky waters and find the golden path. The surface story is simple. Costco's implementing membership scanning devices at the entrance door starting September 1st, requiring every customer to scan their physical or digital membership card before entering. The company has long required shoppers to flash their cards when they enter a store, but its new policy will make scanning mandatory. But that's just the appetizer. Here's what the smart money is really seeing. This isn't about stopping card sharing, it's about executing the most sophisticated membership conversion strategy in retail history. Morgan Stanley estimates that of the approximately 100 million non-paying households that shared a membership with Netflix's paying households, the media streaming company will have converted as many as 25 million households in 2023 and the first half of 2024. Now, Costco's applying that exact playbook to physical retail. The timing couldn't be more calculated. On September 1, annual membership prices will increase by $5 for Costco Gold Star Business and Business add-on members and $10 for executive members, the first hike since 2017. So they're simultaneously raising prices and forcing conversions? It's a double-barreled revenue rocket. But here's where this gets really interesting from an investment perspective. Membership fees generate the majority of the company's profits, accounting for over 72% of the company's net operating income in fiscal years 2022 and 2023, and 65.5% in fiscal year 2024. When you control the profit engine this directly, every new member is pure margin expansion. The numbers are staggering. If the warehouse retailer likewise successfully converts non-fee paying customers through its card scanner rollout, it could see an additional 4 million members join its current 76 million member base worldwide. This lift effect has an upside potential of $324 million in operating profit and earnings of 54 cents per share. Let me put that in perspective for your portfolio. We're talking about a company that just reported a 7.4% increase in membership income, totaling $1,512 billion, with a renewal rate of 90.5% worldwide. Now add 4 million new members at $65 each. That's an additional $260 million in annual recurring revenue with almost zero marginal model cost. But the real golden opportunity isn't just in the immediate conversion. It's in the data and operational intelligence this creates. CEO Ron Vakris discussed the benefits of this new system, noting it provides real-time traffic insights throughout the day and improves inventory management. It gives our operators real-time traffic counts throughout the day and helps them monitor our fresh foods better. It takes the friction of membership verification away from the front-end registers and moves that to the front door. This is where Costco transforms from a traditional retailer into a data-driven membership platform. They're collecting entry patterns, shopping frequency, and behavioral analytics on every single customer interaction. That's Amazon-level intelligence applied to physical retail. The competitive moat this creates is almost insurmountable. This steady stream of income is crucial because it allows Costco to maintain its low-margin pricing strategy, which is a key element of its value proposition to customers. When your profit comes from membership fees instead of product markup, you can undercut competitors indefinitely while maintaining superior margins. Here's what makes this even more compelling. The customer reaction has been overwhelmingly positive. Early feedback has been overwhelmingly positive from both members and staff, leading to increased membership sign-ups. The reaction has been very positive. We've seen some lift in sign-ups from that, as well as improved productivity and improved interaction. Think about the psychology here. When you make membership more exclusive and harder to circumvent, you actually increase its perceived value. By tightening access to its stores, Costco is reinforcing the idea that membership is not just a transaction, but a privilege, one that comes with tangible benefits. The financial impact is already showing up in the numbers. Membership fee revenue for the quarter was $1.17 billion, slightly above Wall Street's expectation of $1.16 billion, marking an 8% year-over-year increase. And this is before the full rollout and fee increase impact. But here's the piece most investors are missing: the international expansion opportunity. We've been using the card readers for 2 years in Europe and piloted them here in the past 6 months. They've already proven this model works across different markets and cultures. That's validation for global scalability. The technology infrastructure they're building supports multiple revenue streams. Recent upgrades have cut app loading times from 8 seconds to under 2, addressing consumer demands for speed and driving increased online traffic as the app now represents a substantial share of e-commerce sales. E-commerce sales rose 18.9%, highlighting the growing trend of online shopping among its members. Now let's talk about the risks, because smart money always considers downside scenarios. Some investors worry about customer backlash or longer entry lines. Some shoppers railed against Costco's new card scanners on social media this week, complaining that the initiative is redundant because the company already verifies memberships at checkout. Some people online also expressed fears about longer lines at the entrance as people learn to use the scanners. But here's why those concerns are overblown. Costco has a 90.5% renewal rate. Their customers are incredibly loyal, and the value proposition remains unmatched. Costco's transparent pricing strategy, including its iconic $1.50 hot dog, fosters a sense of trust and loyalty among customers. This approach not only attracts new members, but also encourages existing members to renew their memberships. Analysts highlight that transparent pricing is a key driver of Costco's high customer satisfaction and retention rates. The broader retail context makes this move even more strategic. Costco is not the first membership-driven company to limit account sharing. Netflix last year cracked down on shared passwords. Since then, it has seen an increase in subscribers, and competitors have started rolling out similar restrictions. From a valuation perspective, this creates multiple expansion opportunities. Analysts estimate that the fee hike could add approximately $290 million to Costco's operating income, representing a modest 2% to 4% boost for fiscal 2025. But that's just the fee increase. The membership conversion upside could be significantly larger. The execution timeline is aggressive and well-planned. Over the coming months, membership scanning devices will be used at the entrance door of your local warehouse. In the coming months, the warehouse store will begin using scanning devices to verify membership cards upon entry. They're rolling this out systematically, learning from each location and optimizing the process. What's particularly brilliant is how they're handling the transition. If you have any questions or concerns, there will always be an attendant at the door to assist you. Costco said workers will be at store entrances to help shoppers navigate the new scanners. They're not just implementing technology, they're ensuring customer experience remains smooth. The food court enforcement adds another layer of exclusivity. In March 2024, Costco's chief financial officer, Richard Galanti, announced that customers would no longer be able to purchase items at the company's outdoor food courts without proof of membership. One of the challenges is that some of the food courts have gotten so busy, particularly if it's near some office buildings or construction sites. Even their famous $1.50 hot dog combo now requires membership. Here's your golden takeaway. This isn't just a membership crackdown, it's the transformation of Costco into a premium subscription platform with physical assets. The combination of mandatory scanning, fee increases, and enhanced exclusivity creates a triple-layered revenue acceleration engine. The stock's 37% gain this year reflects growing recognition of this transformation. The analyst has an overweight rating on Costco, and his price target of $9.50 implies more than 6% upside ahead. But that's based on current metrics. If they successfully convert even half the projected 4 million new members, we're looking at a fundamental re-rating of the entire business model. For portfolio positioning, Costco represents the rare combination of defensive characteristics with aggressive growth potential. This impressive net income growth is driven mainly by membership fees, which accounted for nearly 2/3 of Costco's net operating income. Importantly, this high-margin revenue stream allows Costco to operate with the profitability and stability often associated with software companies. The key monitoring points going forward: watch the membership conversion rates at scanner-equipped locations, track the impact on renewal rates post-fee increase, and monitor the rollout timeline across the remaining 550-plus US locations. This membership evolution positions Costco not just as a retailer, but as a data-rich subscription platform with unmatched customer loyalty and pricing power. In an environment where traditional retail margins are under constant pressure, Costco's membership model provides sustainable competitive advantages that compound over time. Keep your eyes on the golden opportunities. The September 1st implementation date marks the beginning of what could be the most successful membership monetization strategy in retail history. Smart Money is positioning now before the full financial impact becomes visible in quarterly earnings.